We also bring on board Mehrbun Irani, Principal and Head Private Client Group. He represents Nirmal Bang Securities. Mehrbun, good morning. Thank you for joining us. Mehrbun, what do you make of last 2 weeks price action? Globally, things are holding on. Earnings are accelerating. A rate cut has kicked in. Global markets are moving from strength to strength. But the minute I look at Indian markets, things are not looking all that hunky-dory.
I think, Nikunj, I would put it that way, that markets have proved yet again that they are supreme. I think when the oil price hike happened in India, when people were expecting the RBI to cut rates, and when it happened, every voice on the street was stating that we'll go higher. We'll see higher and higher levels, and the markets have proved everybody wrong. I think after a very decent January, I think markets are correcting. And it has led to India underperforming the most global markets. I have a distinct feeling that relatively we will end up outperforming the global markets in 2013. And what lies ahead, I think some more consolidation, some more correction, not ruled out, but I'm hopeful. I'm hopeful on what is going to happen, or what is going to come out of the union budget. I think we need to accept the fact that this government knows that the only way they can harbor any hopes of coming back to power in 2014 is to kickstart the Indian economy. Without that, no scope. 1 out of 3 chance even today is of a downgrade possible. And if, God forbid, a downgrade happens, this government cannot come back to power not for 5 years, but maybe for 10 years also. So I'm quite confident that the finance minister will live up to the remarks which he is passing when he had gone abroad recently, that he is going to work on improving the macros, improving the fiscal deficit numbers, giving what the markets want, and not doing anything that will affect the capital markets negatively. If you look at the food subsidy bill also, that has been put on the deep freezer. So I don't think this budget is going to be more populous than what it can afford to be as far as government finances are concerned. I don't think it's going to be more populous despite people terming it as a possible election budget. I don't think that's possible because I think the finance minister is concerned of a possible downgrade. Even now, despite the fact that everybody is now feeling that it's not going to happen. But then the rating agencies are watching you. So I'm quite confident the budget is going to be quite friendly to the capital market and not as populous as what many people feel. Even the clear-cut direction may come as far as the GST goes. And for all you know, it could be implemented much ahead of most people's expectations. So I think this possibly could be the single largest trigger if the market continues to be nervous ahead of the budget. For all you know, the budget could be the biggest positive trigger for the Indian markets.
Mehrbun, even though optically nothing has changed for the steel cycle, many experts are of the view that Tata Steel now has hit some kind of an valuation bottom. Based on FY14 estimates, according to the Morgan Stanley report, Tata Steel is now available at sub-book. And historically, I've always seen that every time commodity stocks, they've gone below book. And for those who bought these stocks below book, they've made money.
I fully endorse that particular view. In fact, Nikunj, if without having mentioned that view also, I would have mentioned one thing to you. The numbers yesterday, honestly, did it come as a surprise? Was any analyst on the street positive on Tata Steel at a price of say 410, 415, from which it has come down sharply to 376 over the last 7-8 trading sessions? The point is at 375, and assuming the stock opens lower, maybe 350, 355, will I go and buy into Tata Steel, or should I go and buy into Tata Steel? My answer is definitely yes from the longer term. Because if the governments across various countries, various continents, are taking steps to kickstart the economies, which most of them have gone into a severe recession, I think things could possibly be much better globally than what they are now, maybe 2 years down the line. When we will look back at 2013 and look at Tata Steel was available at 350, 360 and I didn't buy into it, I think that type of feel is definitely going to happen. Because I have always believed in one thing, Nikunj. The stock is available to me at 360, 355, 370 rupees today. Will I see a 250 rupees? Will I see a 320? If it is 320, I don't bother, as long as I'm going to see a 450, 500 coming again over the next 1.5, 2 years. So I look at the upside for the stock, for a stock which everybody has spoken negative about, for a sector which nobody is looking at with a positive view. So somewhere along the line there is going to be an opportunity. And what will I buy in metals? I'll buy either a Hindalco or a Tata Steel. Companies which otherwise have great balance sheets. So yes, I agree with that view. And Nikunj, if you had asked me, I think a 350, 355, 360 today, I would have taken a longer term view without possibly ruling out the fact that we could see possibly a 330, 340 coming also. Who can stop that? But I think it's a great long-term opportunity. I agree fully with that.
Mehboob, let's revisit the Nifty 50 changes. Siemens and Wipro will be excluded from the Nifty 50 from 1st of April. I'm not surprised. Siemens is not growing, and Wipro, after the demerger, automatically it will be a different company. It had to move out. But I'm honestly a bit surprised with the inclusion of IndusInd Bank.
Nikunj, honestly, I think your views have normally made me always agree with whatever you state in most occasions. But I have been a great supporter, or rather I would use the word that I've always followed IndusInd Bank right from the time the new management had taken over some years ago. And we have possibly the most aggressive price target today in the broking industry, in the research among research houses. We have a target of around 625 for the stock by December 2014. I feel that after HDFC Bank, possibly, IndusInd Bank is the best private sector bank in the country today. And I think with falling interest rates, we are going to see very sharp improvements in the NIMs for the bank. So it's already in the F&O, which was a surprise earlier for me because it is not a very, very, very liquid stock. But being included right now, I'm honestly feeling a little bit happy and feeling a little bit like vindicated that, okay, fine, IndusInd Bank is at last getting the recognition which it possibly deserved. Yes, the point which I agree fully with you is the thrust as far as the financial sector goes, the weightage as far as the financial sector stocks goes. And I think funds which have been positive on the financial stocks possibly could end up gaining out of this. So what is a surprise over here is Wipro going out. Because I personally feel that Wipro possibly stands out because right now, Wipro is possibly the most under-owned stock among the top 4 IT heavyweights. So it is a time possibly to look at Wipro positively. So I think as far as index inclusion or exclusion goes, honestly doesn't speak much about what is going to happen to the stock price. But Wipro being excluded honestly was a bigger surprise than IndusInd Bank being included.
Yeah, I mean, Wipro has always been part of the Nifty for the longest time I can remember. But also bear in mind that soon Wipro will be a demerged company. The IT business and the FMCG business will be separated. So I guess it was always a matter of time Wipro would have been knocked out of the Nifty. And for Nifty inclusion and exclusion, there is a formula in place. The exchanges, they look at free float, they look at market capitalization, they look at profitability, and they of course give credence to corporate governance. The only reason why I guess NMDC has got included in the Nifty 50 is now because after the FPO, or I would say after the QFS, the free float for NMDC also has extended. So NMDC, I'm not surprised. But my only worry, Mehboob, I may sound slightly repetitive with this one, is that do financials now have a very mega exposure on the Nifty 50? It's about 30% now. I mean, 30% is huge. 30% is big.
Yeah, I agree with you on that, Nikunj. It has happened. HDFC Bank, now IndusInd Bank, I think Axis. I think the weightage as far as the financials goes is something which honestly not many would have envisaged maybe 2 years ago right now. If one had gone back 2 years ago and I would have stated that one fine day this is going to be the weightage, I think people would have laughed it off. But it's happened. And I think this has also got to do with the fact that quite a few of those financials have outperformed the side market by a wide margin. So automatically the weightage also goes up.
Oh, that's a fair point. I mean, 10 years ago, Axis Bank was a 40 rupee stock. Now it is almost at 1400 rupees. 10 years ago, HDFC Bank was a 100 rupee stock, and post split and bonus adjustment, it is now a 5000 rupee stock. But Mehboob, the bad news here is that every time a group or a sector has a strong representation on the Nifty or on the Sensex, I've always seen that group peaks out. We've seen that happen to IT in 2000. We've seen that happen to real estate in 2008.
Yeah, Nikunj, I think relative, I would also like to state that even if you look at the way the stocks have performed, the sectors have performed, I think virtually everybody on the street is quite overweight on the private sector banks. And well, they've lived up to it so far, and I have no reasons to believe they will not continue to perform. But what is worrying is that the same sectors are continuing to perform. Even today, I think if you ask me, and even if I'm going to sound positive on the overall market, I don't have more than 20-25 companies to possibly buy into from a longer term angle, keeping my eyes closed. And honestly, at least 3 or 4 names will come out from the financial services sector. HDFC Bank, IndusInd Bank, maybe an ING Vaishya. So you are the same banks and the same companies and possibly the same sectors continuing to perform well. As far as the PSU banks goes, which are a part of the index, I think SBI and PNB, I think, lesser than the better as far as the provisioning and the quality of assets goes. But at the present price, that could be possibly an opportunity to try and look at the valuations and buy from the longer term angle, though I don't have the guts to recommend them at the moment. But there could be an opportunity somewhere. So I personally feel that over the next 6 months to 1 year, the weightage as far as this particular entire financial basket goes could possibly increase further if one looks at it vis-a-vis the market cap angle.
Right. Nirmal, before we let you go, from a very short-term perspective, what was your top market idea, stock idea at this point?
Well, I was thinking, and I'm being very clear about it, that I'm planning to go and buy into an oil stock today. Because we are, despite being very positive on the oil pack over the last 2-3 months, I feel that I'm a little bit underweight as far as the oil stocks goes for my clients. So whether I buy into an upstream company like an Oil India or a downstream company like an HPCL is something I'm yet to honestly decide. But I'm looking at oil stocks possibly doing well because I have a gut feeling we are going to see diesel and petrol price hikes coming despite the fact that there are state elections coming in the next 5-6 months. I'm quite confident they have to happen because there is no choice for the government. So maybe an HPCL because more marketing assets as compared to PPCL is something which I'll prefer. And I think I'll prefer Oil India to ONGC. And well, if you look at the way the stock prices have performed, they have possibly gone back to the level to which they were before the oil price hike happened. So I think there is an opportunity somewhere in buying into oil stocks.